Did you know the average home price has risen 50% faster than wages in the last decade? At this rate, owning a home will soon be out of reach for millions. And while a new administration is about to take control and a slew of executive orders are about to be signed on day one, there'll be a flurry of activity for sure. The new team will be in action, and that will create a new future for the country. Fortunately, everyone from both sides of the aisle agrees. Housing affordability is a crisis that can't wait, and we're all hopeful. And there are proposals on the table, solutions that sound promising, but currently they're just proposals. And that's the problem. Americans are stuck waiting for Washington to take action while prices keep climbing and opportunities slip through your fingers. So, what are you supposed to do? Sit on the sidelines waiting for politicians to figure it out? Or take control of your future, like right here and right now? By the end of this video, you'll know the 3 top creative financing strategies that can break this market wide open for you, whether politicians make moves or not. The first one being seller financing or owner financing. I mean, imagine buying a property without begging for a loan. It sounds impossible for most people, but that's the beauty of seller financing. Few know about it, and for those that do, most really don't even understand it. It works like this. Instead of dealing with the bank, you make payments directly to the seller over time. Think of it like buying a car from your neighbor, and you set up a payment plan between the two of you. There's no banks, no middlemen, just a mutually beneficial agreement. With housing affordability at an all-time low, more sellers are open to creative solutions to move their properties. They understand that traditional buyers are scarce, so offering financing that can make their property more attractive. Not to mention, they can sell it for more money. That's the benefit for the seller. But the benefit for you as the buyer, 1, it's easier to qualify. You get to skip the strict banking requirements. 2, the terms are more flexible. You get to negotiate the down payment, if there is one, the interest rate, if there's any, and the payback period. I mean, anything goes here. Nothing is off limits. As long as you and the seller agree, it's good. But in a market where everyone seems to be struggling, why would a seller agree to this? Because they're facing the same harsh reality. Properties are sitting longer on the market, and seller financing can be a win-win solution. Can you see how this strategy turns a challenging market into an opportunity? If you'd like a copy of my seller financing contract, I uploaded a copy for you at epicpromissorynote.com. Now, the second strategy is called Subject To. This is where you take over an existing mortgage. It's like finding a great deal, and the money, it just comes along with it. It's like stepping into someone else's shoes who already got approved for a loan and you taken over their mortgage payments. With a Subject To deal, that's exactly what you do. You take over the seller's existing mortgage without officially assuming the loan, meaning the loan, it stays in their name, but the property, it goes in yours. It's very much like subletting an apartment, but instead of renting, you're owning. You get the keys, you get the deed, and you get control, while the original mortgage, it remains intact. Given that interest rates are high and likely to stay that way for a while, taking over an existing mortgage with a lower rate, it's gold. Sellers who need to move quickly due to financial strain or life changes may be more open to this arrangement, and that's why they would agree to it. You see, there's a huge benefit to this type of deal for the right seller, and the benefit for you is a lower interest rate in most cases. You get to benefit from the seller's lower mortgage rate. You get reduced closing costs. There's not going to be any expensive loan origination fees, and then you benefit from a quick transaction. You get to bypass all the lengthy, complicated loan approval processes that banks put in place. In a climate where obtaining affordable financing is tough, this strategy can be the ticket to your next property. You do want to be mindful of the due on sale clause that's present in most mortgages, which allows the lender to demand full repayment if the property is sold. However, many lenders may not enforce this if the payments remain current. In fact, in 18 years with over 50 of these under my belt, I've never had one called due. So could Subject To be the creative workaround that you've been searching for? Because housing costs, they're squeezing everyone, regardless of politics or income level. The housing affordability crisis isn't just a headline, it's a reality affecting millions, from urban centers to rural communities. People across the political spectrum are feeling the pinch. To make matters worse, forecasts indicate that mortgage rates are likely to remain high, with no significant relief on the horizon. And that's terrible news for many. But as Albert Einstein famously said, in the midst of every crisis lies great opportunity. This couldn't be more true for the current housing market. And for someone like you now, who has 2 new financing strategies in their tool belt. And here's a third. Consider proposing lease options to sellers, like rent to own. This strategy, it lets you lease a property now with the option to buy it at a predetermined price in the future. It's like reserving a hotel for next year's vacation at today's rates. You see, you secure the price now, regardless of how much demand may cause the prices to increase. And if they fall, hey, you just cancel. No penalty. You're not obligated to buy. But with housing prices expected to continue rising and interest rates staying high, locking in a purchase price today can save you a ton of money down the road. Plus, this strategy, it gives you time to improve your financial situation if you need it. So the benefits of a lease option for you are: 1, a low initial investment. Often it's just an option fee, a small fee, and a regular monthly payment. Number 2, time flexibility. You can use the lease period to save money or boost your credit score. And 3, equity building. Some agreements allow a portion of your rent to go toward the purchase price. In a market where buying seems out of reach, lease options provide a viable path to homeownership. Or sign what's called a master lease, where you have the option to sublease the property to someone else, where you can make a little bit of cash flow for yourself while you wait for the market conditions to line up for your specific situation and goals. Does the idea of living in your future home now while you prepare to buy it sound appealing? Let's face it, the traditional real estate market isn't friendly right now. High costs and interest rates are locking out potential home buyers. But giving up, that's not the solution. Instead, these creative financing strategies offer alternative routes to owning and investing in property. Waiting for the market to become more favorable, that could mean missing out entirely. With no significant relief in sight, the time to act is now. And now that you're equipped with these 3 powerful strategies, it's time to take action. Research further, consult professionals, and start looking for opportunities where you can apply these methods. If you're wondering where you can find sellers that would be open to these types of creative strategies, I went ahead and I pulled out this video right here for you to watch next. If you'd like some one-on-one help with picking up your next investment property, go to reiace.com, answer a few questions, and then pick a time for us to hop on the phone. By thinking creatively and decisively, you can turn today's challenges into opportunities. Don't wait for the market to change. Change your approach. Thanks for watching. I'll see you next time. Take care.